Hello and good morning, everyone. My name is Rufas Kamau, and welcome to the daily market snapshot webinar. And today we have quite a number of things that we will be discussing. And this is basically the key market developments for the day. And of course, once we do that, we also cross over to the charts, try to do some technical analysis and understand the key highlights for the day. So once you join in, can just say hi on the live comment section, and these will confirm that everything is working just fine. Hello, Jason, and thank you for joining the session. Hello, Jeremiah. Thank you for joining the session. Let's get things started. So on the economic calendar front, we don't have much happening this week. So we'll go through that and try to understand the key things or key topics for the week. Once we are done, then we basically try and understand other highlights in the market. So I'm trying to share my screen and load the economic calendar. So the biggest news for today, being Monday, the 20th of November, this is 40 days to the end of the year. We are looking at a pause in interest rates in China, where the People's Bank of China chose to hold rates steady this morning at 3.45% for the 1-year loan prime rate, and of course, 4.20% for the 5-year loan prime rate. So what this means is that China has been cutting interest rates for the last couple of months, and in this case, they chose to hold steady as they look to stimulate the economy and support economic recovery, especially after they had these extended lockdowns during COVID. So as a result of these, we have seen out of volatility coming from the USD-CNH pairs. So looking at USD-CNH, it's down 0.45%. So right from the opening of the day to the current price level, now it's 0.47% down. So expect to see some further decline with the dollar strengthening against the Chinese yuan. So in this case, remember we had this bullish channel that was broken. Then the market traded a little bit upwards for a while, and this was as far as last week. Then we had this break happening last week and then a continuation further downwards. So in this case, I expect to see some further downside happening in the USD-CNY pair, especially after reaching these highs that we saw a couple of months ago, around 7.34245. So what we are witnessing currently in the global Forex markets is a dollar that is basically taking a step back downwards, and other currencies are strengthening against it. So in this case, the Chinese yuan is basically gaining against the US dollar, and I expect this continuation to proceed towards or across the week. So looking at the dollar index, we know what has been happening and what happened last week. So there was a big sell-off in the dollar against the basket of other currencies. So opening the week today, you can see that we are seeing some further bearish momentum with the last week's support being broken early this morning. So what happened to be the start of the week was a retest of this area, which was the low of last week, and then the market kept going downwards. So I expect to see some further downside in the dollar index. So main reason that the dollar index is weakening is after the CPI news that we saw last week, where US inflation surprisingly dropped to 3.2%, which is in line with the Fed's expectations. Remember the target is 2%. So after inflation rising for like 3 months to 3.7%, the sudden drop to 3.2% was quite surprising in the markets. And now there are increased bets that the Fed may have reached the end of the rate hiking cycle. So with the end of the rate hiking cycle, basically means that there's increased bets that the dollar will now start to weaken against other currencies. And we are seeing this happening across board. So clearly, you can see the big spike in the pound against the dollar. Some pullback happened last week, and now we are retracing back upwards, and we are almost hitting the high that we saw on Tuesday last week. So this is further evidence that the dollar is weakening. And of course, other currencies are taking advantage of this. So for instance, in a pound USD pair, we can see this formation of a cup and a handle formation. Of course, for anyone who trades this kind of patterns, you know that the neckline is along this route. So there's still more room for upside, so slightly higher than the current rate. We could be seeing the pound touching around 1.255. So in this case, there's still more room for upside for pound USD. So expect this to be a continuation and a constant theme for the week, where the pound could be gaining against the dollar and getting to 1.255 price level. So with this in mind, we also continue checking the economic calendar to try and understand the key developments for the day. So as you can see, Monday is largely a quiet day, and this is quite usual. We don't normally have some basic or major announcements happening on Mondays. So this makes it price action traders territory, meaning that we follow the price action patterns without any fear that there is going to be any major news being announced. And in this case, it proves to be true, save for the announcement at 9:45 p.m., where we will be looking forward to the Bank of England Governor Andrew Bailey, who is due to speak at the Henry Pram Memorial Lecture in England. So it may not have as much impact in the markets, so it doesn't seem like a major event. So in this case, we expect markets to behave normally. So as we get on to Tuesday, we will be looking at the New Zealand trade balance speech from RBA Governor Bullock, and of course, the monetary policy meeting minutes from Australia. So we'll also be looking at the inflation data from Canada on Tuesday at 4:30 p.m. Then later on, the FOMC meeting minutes after a speech from ECB President Lagarde at 7 p.m. So on Wednesday, we'll be having a speech from RBA Governor Bullock again, and then ECB Financial Stability Review before we look at the weekly unemployment claims in the US, and this will be at 4:30 p.m. on Wednesday. So if you haven't noticed, major US news have moved from 3:30 p.m. to 4:30 p.m. after the daylight saving time adjustment that happened 2 weeks ago. So we also be looking at the revised University of Michigan Consumer Sentiment Survey at 6 p.m. on Wednesday, and of course, a speech from Bank of Canada Governor Marklem. Then on Thursday, we'll be having the manufacturing and services PMIs. So we'll be getting at 11:15 the French data, and then 11:30 we get the German data. Then 12 p.m. The entire Eurozone data. Then 12:30 p.m. We get the UK data before we look at the ECB monetary policy meeting minutes at 3:30 p.m. So as we approach the end of the week, we'll be looking at the New Zealand retail sales data, and this will be at 12:45 a.m. on Friday. Then the German IFO business climate data at midday on Friday. Another speech by ECB President Lagarde at 1 p.m. Then Canadian retail sales as well as core retail sales data at 4:30 p.m. So the last important data point as we approach the end of the week will be the flash manufacturing PMI and services PMI for the US, and this will be on Friday at 5:45 p.m. So that remains the key highlight for the week. Then as we proceed with trading today, it's also important to notice the big spike that happened early this morning in Bitcoin prices. So right from the open here, you can see the big jump was about 1.4%. And this happened right after we got data that a pro-Bitcoin presidential candidate in Argentina basically won the elections. And this led to a big spike, hopefully looking forward to pro-Bitcoin Argentina. And of course, with higher adoption, it basically means higher demand and potentially higher prices. So as we head into the halving year, which is basically 2024, there is a big upside potential for Bitcoin. So besides this, I don't think there's any other major news that we are expecting for the week. So in this case, we focus on technical analysis and continue trading the weakness of the dollar. So the dollar index weakened to around 103.6 on Monday. This is this morning, hovering at its lowest levels in 11 weeks as cooling US inflation reinforced bets that the Federal Reserve has reached the end of its tightening cycle, while traders turn their focus to potential interest rate cuts next year. The Central Bank of the US is widely expected to keep rates unchanged again in December, while markets see a 30% chance that the Fed could begin lowering rates as early as March 2024. So investors, not inventors, now await latest FOMC minutes and a slew of economic data in the US for further guidance. Meanwhile, China's central bank left its 1- and 5-year loan prime rates steady at 3.45% and 4.2%, respectively, in line with expectations. The dollar weakened across board, with the most pronounced selling activity versus the antipodian currencies and the yuan. So in this case, we understand that the overall theme is a weak dollar. This could have several implications in the markets. So let's go through some technical analysis and understand how this may affect us as traders. So first things first, the USD JPY has broken a major support level. So if you've been following this pair, you know that this area was acting as a very strong support. And once the market got there, we basically saw a very strong and important candlestick, indicating a rejection of lower prices. So with the pin bar, it was an indication that the prices could be bouncing from here. But then following the price action of the last 2 hours, it seems like a continuation with the bearish momentum. So there is quite a strong bearish momentum here. Notice how a major trend line has been broken. And in this case, the expectation is that the USD JPY continues trading lower. So this is a much welcome reversal, especially for people who have been trying to short the pair for the better part of the year and not meeting the targets. So after having this almost double top formation, we are basically seeing a strong acceleration downwards. So it seems more reasonable to look for short selling positions in USDN as we proceed with the day, unless something fundamentally changes. So as for the Euro USD, we saw the market making a big jump followed by a flag, and then the flag was broken towards the upper side. Market pulled back and continued higher. And then today, being Monday the 20th, we are seeing a continuation of the same, basically showing a very strong resilience and recovery of the euro against the dollar. So I expect to see some further upside as we continue with the day. So for USD CAD, you can see the strong bounce that happened on this lower trend line. So I remember analyzing this with you guys last week. And then once we got to this area of resistance, 1.37835, we saw the market pulling back downwards. And clearly, the market is headed back to the previous support. So the trend line is way below, around 1.36674. So I expect to see some further downside happening here in USD CAD as the dollar continues weakening against other currencies. So gold, on the other hand, seems to have changed direction. So with the weaker dollar, we are now seeing a much more stronger gold. So in this case, after trading in this formation where there was this bearish channel and then the market started rising, now we are looking forward to another potential high. So after seeing this strong momentum that got us to this area here, which is around 2008 dollars per ounce of gold. In this case, from the 1 hour chart, it seems more reasonable that gold is holding this area as the support line. So if we eliminate the other one, which was broken last week, then it might make more sense to start looking for bullish positions in gold. So in this case, by just zooming my chart, you can see the number of times this trend line has been hit and acted as support. And now, as prices keep on pushing back downwards, this becomes more of a value area, an area of interest, where you're looking for evidence of a bullish entry. So if you happen to see any bullish candlesticks entering at around this area, then it might represent an entry opportunity for a bullish position. So as for AUD USD, we are seeing a very strong acceleration and a break above this resistance, which basically implies that there's more potential for upside momentum. So after trading within these two trend lines for quite a period of time, I would say over 10 weeks, This recent break is welcome. So in this case, I expect some further acceleration upwards as the Australian dollar recovers. So as for US equity indices, beginning with the Nasdaq, we saw this acceleration happening, and now we are on the course of testing the all-time high of 15,931. So from the forward chart, this is how it looked like. Once the market got to this resistance, there was an immediate rejection last week, and the market tended to trade sideways since then. So from an even smaller time frame, in this case, I'm looking at the 15 minutes chart. It seems like the market is basically trading around this zone, with this as the upper trend line. Of course, the lower trend line is seemingly taking shape around this area. So monitoring these two trend lines will be important. And of course, there seems to be more appetite for the upside, especially after the upwards momentum that lasted the last 3 weeks. So we don't know when the market is going to pull back, but it seems like a good way to focus on the market right now, looking for the potential of the Nasdaq taking a step backwards. But then the all-time high seems quite promising. So as we speak today, there's more chances of the upside than the downside. So I'm looking for potential market opportunities where the Nasdaq rallies above its all-time high. So its all-time high is slightly higher. So if you go to the weekly chart, it's somewhere around 16,776. So looking at the summary or the better part of the year, we are seeing this constant acceleration and a very strong momentum upwards compared to last year, which was majorly bearish. So all the losses that were made in the Nasdaq 100 last year are almost being erased with this current strong momentum that we are seeing. So from the daily chart, you can see that the highest price we have seen on the year is 15,933. So potentially the market is looking to break that. Of course, we can already see momentum coming in as we get into the London session. So there is still more opportunity and potentially towards the previous high. So that would be a reasonable bet. And of course, if you look at the correlation, you'll notice that the Dow Jones is also headed higher. And also, if you are a trader who focuses on the S&P 500, then you notice that this range has basically extended. So if I was to do this, you notice that it has been a sideways momentum for the last couple of days. I would say the last 3 days. So today being the 4th day, this is the area we are monitoring, and there seems to be a trend line that is coming up here over the last 2 days. So this implies that the market is now forming higher lows and potentially could break towards the upper side. So as for Brent oil, there was a record bear market happening last week. But then as we approached the end of the week, we saw a very strong recovery in oil prices. And now oil is back to over $80 per barrel. So with this V-shaped recovery, I expect the momentum to continue upwards, especially considering that this bear market lasted for quite a period of time. I would say 4 straight weeks, we saw the oil prices going downwards. So right from the top here, where oil was trading at around $92 per barrel, we saw a big deceleration down, 17.02%. This is quite a big sell-off. But then usually we know that whenever there's such a big sell-off, this can be overextended and the market will eventually recover. So in this case, I expect some form of recovery to be continuing this week. So if I was to zoom out and draw our trend lines here, you'll notice there's a strong bearish trend line here that is currently being tested. And in this case, it could potentially work as the support line. So in this case, it's important to mark the support area here, which was around $71 per barrel. And of course, notice the strong acceleration that happened 3 months ago. Then in the last 1 month, a bearish momentum, this month, bearish momentum, but it seems that oil prices are seemingly finding an important support around this area. So there is a good likelihood that we could be seeing some continuation of this recovery in oil prices. And of course, from the 1-hour chart, we know that there's a resistance somewhere close by on this trend line. So perhaps the expectation is that we see oil prices retesting the 82.177 price level before making a decision on trading oil. So in this case, this seems like an important level, and we could be seeing a clean break or perhaps even a reversal, and oil prices continue on the bearish momentum. So European equity indices had a big spike in the last 15 minutes. So in this case, you can already see the equities attempting to go for another high. So the bullish momentum seems to be continuing, and this is a trend that has lasted the last 3 weeks. So we are entering into the 4th week of strong equities momentum in Europe. Of course, for the French 40 index, we are seeing, I would say, a 10-week high. So this is expected to continue as we continue with the rest of the day. Of course, for the Euro 50 index, there seems to be some form of bullish momentum that is still continuing. So bets on a continuation of this trend. So as for the UK 100 or the FTSE 100 index, we have had this 3-week momentum, which is now beginning to form a channel. So despite the current pullback that we are seeing here, where the market was unable to form a higher high, I'm still quite positive that we'll be seeing some further upside momentum in the UK 100 index. So I'm trying to check on your questions and comments. There's DMW in the house. Good morning, Joe, Richie, Muiti, and Steven. Hello, Moaz. I can see Esther, Ochien, Kiprui. Thank you guys for joining. Hi, Leonard, Sunset, J Squad. So first good question is coming from J Squad. OPEC Plus may consider an additional 1 million barrels per day output cut this weekend. What is your thinking with Russia lifting the export ban? Will it not be a compromise? So yes, Russia had banned its oil export, but now with the potential lifting of the export ban, it could basically increase oil supply, and this was the fear driving the bear market. But then on the other hand, if the OPEC announces another 1 million barrels per day output cut, then this could be pretty bullish for the week. So it's two conflicting data points that we have to constantly monitor this week. But then judging by the current oil prices, there's a good likelihood that we'll be seeing a strong recovery, especially after we saw strong economic data coming from the US. Fed Vice President Michael Esbar noted the Fed's concern about hedge funds' high leverage basis trades. What is your take in regards to the Monetary Policy Committee on hiking in December? So in this case, there's increased speculation that the Fed may not go for another rate hike. So a lot of traders, market players already understand that with inflation moving as expected and dropping to 3.2% in the US, there's a very high likelihood that the Fed will not go for further rate hikes because, as we all know, the rate hikes going above 5.5% risks what we call a credit event. So we have already seen the sudden rate hikes lead to several collapses of banks. So if the Fed was to continue, then it would basically risk the monetary system in the US. So with inflation behaving as expected, which is the main target for the Fed, then it doesn't make sense to go for another rate hike. So hello, Cherry Genius. Thank you for joining the session. Which one of these practices is safe or more yielding? Use a lot size of 0.05 or use 5 0.01 sizes. So it's the same thing. If you are trading 0.05 or you trade 5 different trades of 0.01 sizes, then you are still trading the same lot size technically. So the idea is to basically risk an amount of money that would not hurt your account in a trade. But then if you do it consistently and you have more winning than losing trades, then you get capital appreciation in your account. So in this case, it doesn't make sense to, let's say, subdivide your trades. But then if you have different targets in your trades, for instance, you have take profit 1, take profit 2, take profit 3, then you might consider splitting your trades to achieve that goal. But then if you are just splitting the trades, then it doesn't make sense. Tech 100 role, I think I've already covered that. And this is the NASDAQ. US Tech 100 is basically the NASDAQ. So as I mentioned, we've had three great weeks for the NASDAQ, and now we are testing a high of the year. And we're also very close to the all-time high for the NASDAQ, which is around 16,776. So expect this bullish momentum to continue. And as we test this resistance, I know there is a lot of traders who are looking for short selling trades to trade in the opposite direction in the market, but then we don't have any evidence of weakness continues. There's also a request to check on the pound USD, and this is under 15 minutes. So what we are seeing here is more of a U-shaped pattern. So for anyone who understands the cup and handle formation, we know that the pound USD is looking to complete this U-shaped pattern. And if you happen to be a technical price action trader, then you understand this. So in this case, we expect the market to be retesting the previous level. So the previous high is all the way up. So we are looking at a potential level of 1.25046 to be acting as the resistance. So as much as we are seeing this upwards trajectory, this is going to be a significant barrier for further upside momentum. So if you're trading on the short run, this might be something you want to consider. And pause for a moment as you observe how price reacts around this area. So from the H1 chart, this is how it looks like. So it's basically the market looking to retest the high of last week. So there's also a concern about the weekly resistance on gold. So weekly, okay, so if you go to the forward chart, you can see last week, we haven't hit the high of last week, neither of the low of last week, but we are closer. I'm talking about the last 2 weeks. So last week's high was just nearby, but then we are on this upswing. And of course, considering the weak dollar, then the potential is that the market retraced the previous high of $2,008 per ounce of gold. So from the 1 hour chart, as we see this support, there's this likelihood that the market could bounce from here and move higher. But then we don't know this yet. So that's why I highlighted this area as an area of interest, noting that if price was to break below this trend line, then we would trade lower. And if it happens to show a bounce like the previous one here, then in this case, we might consider looking for bullish positions. So the idea of highlighting this area is because it's an area of interest where you can easily make a decision, and that would be based on price action. So it's simply observing the behavior of price around this area. If it shows a strong break beneath, then we go for short selling positions. Of course, if there's evidence of bullish entry, like it happened so many times before, then in that case, you consider going for a bullish position. So something like this would largely indicate a buying opportunity. If it was like this, even better. And of course, if it was like this, it would still be a bullish idea. Same thing as what happened past midnight. So if you happen to see patterns like this, be patient, see what price action on this area. So there is a big inefficiency on pound USD trade after CPI news last week. So I'm asking, will it continue going up without feeling the inefficiency? I expect the pound to complete the pattern. I think I've already done the analysis for the pound USD. Good question from Trapsked. Are we likely to see a weaker dollar this week? Yes, absolutely. As investors basically internalize the news of last week and a potential pivot. Pivot is the change in correction in Fed decisions. We were expecting to see interest rates moving on the upper side, and now investors are betting on interest rates moving downwards. So we are currently at the point of what since markets are basically forward look index. So as we proceed with the day, you can already see that it's only breaking news as react to last week's news. There's a potential continuation of this trend where the dollar continues weakening against other currencies. So that's it for the day. Thank you very much, guys, and I hope you enjoy your trading day.